Hello, welcome on TECS Lens. Welcome everyone. Welcome Myrto. I'm glad for having you here today, having the opportunity to discuss with you. Myrto Lalacos, principal at VC Lab. Welcome.
Thank you so much, Adonis. It's great to be here.
Where are you joining us from today?
I'm joining you guys from Athens, Greece. This is where I'm based.
But you do work for VC Lab, right?
Yeah, exactly. So the whole Desal Group team is completely remote. The headquarters are in Palo Alto, but a lot of the team is in other places in the United States, Latin America, Europe. And yeah, specifically, the team that runs the accelerators is mainly composed of people living in Europe. And it's a bit of an inside joke in the company. So yeah, I'm based in Athens.
Okay, fine. What's the mission of VC Lab and your role there, Myrto?
Yeah, so the mission of VC Lab is to democratize access to venture capital. So we have a strong belief that venture capital is potentially the only solution to kind of reverse the course that the world is on right now with everything that we're seeing that's happening and so many kind of existential issues, you know, kind of threatening our day to day. So we believe that venture capital and kind of putting money to work is probably the most effective solution to reverse and find solutions to some of these problems. But how we saw it was that, there were very few venture capital firms managing the large majority of venture capital capital worldwide, right? And so there were very few kind of people making these decisions. There was a lot of kind of unethical behavior amongst VCs uh, that was making it hard for founders that were, potentially making bad investment decisions and not really kind of carrying the day-to-day job with that lens of I'm responsible for what I'm going to be investing in because this, who I choose to invest capital in and take a chance on and who I decide not to invest in has so many kind of repercussions in for the future, right? And so we're kind of coming at it from the perspective of you don't need to have gone to one of these really large schools and have an investment banking background or there was kind of like a very stereotypical kind of resume that you had to have in order to kind of be a VC and even more so if you had a chance to kind of launch your own fund. And we're kind of coming at it from the perspective of you don't need to be all that, right? And anyone can really launch a VC fund as long as the information is out there and available for you to kind of know how to do it. And so, yeah, that's kind of how we got started. We also saw that there were a lot of ecosystems in the world that didn't have VC funds, right? Mongolia, before kind of VC, we helped the first fund be set up in Mongolia and other places as well. And so we're just kind of empowering ecosystems to have their own venture capital funds and to be investing locally, but with, ethics in mind and that responsibility to create a better future.
Both your approach as regards ethics and the vision as well is amazing in my eyes. And as an alumni of VC Lab, I have to mention that this is the very very interesting part of your work and how you do educate the market in this way. But if you look at the industry right now, what feels different compared with just a few years ago?
Yeah, so much, to be honest. When we started VC Lab, and this was actually before my time. So when Adeo and Mike started VC Lab, there was a whole kind of part in the curriculum that was outlining the tech stack that you need to have to run your VC firm, right? And it was like, you need like HubSpot, is it HubSpot? Is that what it's called? Yeah, HubSpot CRM to do this, and then a Zapier integration to Notion to do that, and then you like Zapier integrate your Slack and whatever. And it was kind of like, here's like the tech stack, so now, for example, we built Desal Hub, and it kind of handles end to end all the processes that VC funds need to launch their firm, but also to kind of scale their firm. So it's all in one place, right? There wasn't a single piece of software out there to help VCs get set up and run their firms on, right? So that's now in the market. And then with that, there were a lot of bad vendors, quote unquote, right? So you'd want to launch a VC fund, and then you'd speak to a lawyer and they'd be like, yeah, I can set that up for you. And they would set it up really badly because they didn't really know how to do it. And right, like to set up a VC firm, you need the 3-entity structure. They do 2 entities, and then you get to fund 2. You're like, shit, how am I gonna, you need to unwind all of this. It costs a lot of money. Now there's a lot of kind of providers that take a more kind of holistic approach to supporting these new and emerging fund managers in running their back office, their fund admin. And this includes things like, your legals, your accounting, your compliance, making sure that you're compliant. A lot of vendors would be like, yeah, I'll do your accounting, but I don't care if you're not compliant at all. You could, so anyway, so those things didn't exist. Now they do. There's kind of holistic solutions out there. Desal Partners is one example. And then the other kind of big shift is the tools that VCs have at their disposal to do the things that they need to do. So if we look at a VC fund, all of these more technical bits, accounting, legal, compliance, your back office provider can do that for you. But still today, if a fund manager still needs to spend a hell of a lot of time fundraising from limited partners, and obviously finding the best deals to invest in. And for those 2 things, so these are still kind of the 2 main pillars of activity that a fund manager still needs to do. And no back office provider is really going to take that away from them, right? So on those things right now, there are so many AI tools that have been built to help, that are, sitting side by side with these fund managers, helping them to be more effective in fundraising for the fund. So kind of getting the fund set up, and also deploying the capital, right? So there's so much AI that will, now analyze your deal flow and write your deal memos and be your investment committee, right? And so it's incredible what we're seeing now. These new kind of VC funds, they're kind of AI VCs, right? Everything is done through AI except for kind of the human relationship, and even that is enhanced with AI, right? So there's tools in Desal Hub I mentioned before that kind of take information about the limited partner that a certain fund is talking to, and adapting kind of the communication based on what the AI knows about the LP. And so that helps to build those relationships. So it's a really fascinating time to be launching a fund, and the landscape is changing really quickly.
Mm-hmm. And what are the strongest trends shaping venture capital right now?
Yeah, so what we're kind of seeing is, there was a point in time, I remember it was maybe like 10 years ago, when you'd listen to a TechCrunch podcast, and there's so many episodes about these micro funds, and micro funds were maybe $10 million funds kind of thing. We're starting to see the nano fund right now. So there has been innovation in the market, largely kind of driven by Desal Group, and kind of the work that we're doing kind of behind VC Lab to help the ecosystem. And now we've been, because it's been very expensive to set up a VC fund, a traditional VC fund. right? And so what that meant is that a venture capital fund had to be minimum $10 million for the economics to work, because so much of that 10 million is going to be taken out to do the fund admin and kind of the things that you don't see in the background for the fund, right? Like the filings, the compliance, etc. And so it meant that you couldn't, there was a big kind of barrier for people wanting to enter the market. Like if you couldn't raise $10 million, and you probably couldn't set up a fund. And now, we're kind of innovating with that, and we're finding different structures that are allowing people to set up funds starting $1 million, right, with the economics that are still working. And so there's kind of this shift towards the nano fund. That also means that we're seeing a big change in who is actually investing in these VC funds, because if you're doing a $10 million fund, you need much larger limited partners. The kind of minimum ticket size you could have brought in is kind of 100K or something from each. And now, because these funds are getting smaller, it means that kind of the tickets from the limited partners can be smaller as well. And so we're kind of seeing a shift in kind of who these limited partners are. And we're seeing more women starting to invest who wouldn't have traditionally been very comfortable kind of starting to invest in venture capital at that kind of rate. People from kind of underrepresented backgrounds, right? So that's really exciting. And also we're seeing that talking about these new types of limited partners, we're also seeing that a lot of people who used to be angel investors and invest in individual startups are now starting to become limited partners, because with the same kind of ticket that you could invest in individual startups, you can invest in one of these nano funds and get much wider exposure and make the power law work for you.
You work with fund managers across continents, right? What regional differences stand out to you the most?
Yeah, so, venture capital started in the US, but the model is applicable everywhere. And I think sometimes that's missed a little bit, right? So you kind of want, if you're kind of starting a VC firm in your local ecosystem, largely the same kind of, that you'd need to adopt the same exact business model, and you don't need to reinvent the wheel, right, in a lot of ways. So the main differences are kind of maybe the relationships and how you may be kind of bringing limited partners into the fund, and the limited partner understanding in what venture capital is, and how the economics work and stuff like that. So because there's a lot of regions in the world that just wealthy people didn't have venture capital as an available asset class that they could invest in, there is just kind of a little bit of education that needs to be done more widely in regions outside of the US, to that effect. Having said that, if you are launching a fund in a region, up and coming region like that, you will always find some people, especially kind of if you look closer to the startup ecosystem locally, that they do understand VC and they really do want to be investing in these funds. And so for emerging fund managers, it's very important to make sure that you're targeting the right people, right? So you're not just going after wealthy individuals, you're going after wealthy individuals who also kind of know and are interested in venture capital. And ideally, they also kind of believe in the type of fund that you're looking to set up. So that's kind of what I would say. So for example, we talk about this a lot in the MENA region, it can take a long time to really understand whether an LP is going to come into your fund or not, right? So they'll do a lot of meetings, and you have to develop the relationship a lot before they kind of come into the fund. Whereas in the US, they'll kind of just sign a commitment straight away, right? So there's kind of these differences that we're seeing.
And where do you see the most momentum for new funds formation globally?
Yeah, so there's a few hubs that are popping up. Latam is, doing incredibly well right now. There's quite a few countries. Chile, for example, they had their first unicorn, and one of the funds that was in VC Lab and one of the earlier cohorts invested in them, and so Africa is doing really well. I really love what's happening in Africa too, because from a diversity perspective, they have the most diverse kind of ecosystem when it comes to new and emerging managers. And when we look at kind of the regional split between, from the perspective of kind of the gender diversity, we see that Africa is always the most diverse ecosystem. So you'll have, every year something like 45% of the new funds that are being launched have at least one woman GP in them. So yeah, there's a lot of kind of, hubs like that are popping up that we're super excited about.
Myrto, from your perspective at VC Lab, what defines a strong startup pipeline for early funds?
Yeah, so I like this question because a lot of people ask us, how do we select, which fund manager should come on the program and which fund managers have what it takes to launch successful kind of VC funds. And access to deals is such a big kind of topic, right? And we're seeing a lot of fund managers that maybe don't even have an investment track record. So they're launching a fund without really having made investments in the past, but limited partners are taking bets on them because they have these this very rich kind of pipeline and unique access to these incredible founders, right? And we're kind of, our view is that quantity and kind of the number of deals that a fund manager sees doesn't really matter. It's really the quality that counts and how hard it is to get into those founders. So are you someone who has built a community of founders, and anyone who's even thinking of launching a startup joins that community and speaks to you for advice before they even, and this is before they even launch the startup, right? So are you the first person to know when any of these kind of people are thinking of launching a startup, right? That's unique access because you've built this community, or maybe you're running an accelerator at university and you're working with all these researchers or students that only you are their only resource if they're thinking of going down the entrepreneurial path. So it's really about having unique access. Also, we're seeing, we always see a lot of people who are kind of like, okay, I'm gonna start an AI fund, and you're like, okay, what's going to make you win in AI? They're like, it's not really that. It's that there's so much money to be made in AI right now. And these companies that we're going to invest in are going to be super successful. And I think people don't really understand the difference between the opportunity a lot of the time and the advantage that you may have in that space where you're seeing the opportunity, right? So if you've spent your whole entire life around in the fintech space, let's say, in one way or another, and now you want to launch a fund in AI, not a lot of limited partners are going to take a bet on you. Founders won't really want you to be their investor either because you're just new to the space, right? So it's not because, and this is especially true in venture capital, it's not because there's opportunity that there is advantage. You really just kind of want to tease out, if you're thinking of launching a fund, or if you're thinking of investing in a fund and you're looking at this kind of pipeline and access to deals of the founder, you really want to understand how unique is their access and what has come out of that pipeline in the past. Are these founders really top notch and have, are these communities actually producing really valuable companies? Or is that university kind of known to spin out very valuable kind of research and that then gets kind of commercialized, right? So whatever space it is, you just want to know, is that access unique enough? And then, of course, what strategies, tools are in place within the fund to sift through the deal flow that you're getting and make sure that you're not missing the needle in the haystack or the diamond in the rough.
And what are the most effective value-add levers young funds can offer founders beyond capital?
Yeah, so from my perspective, these things haven't evolved much in the last kind of 5 years or so, 5 to 10 years, right? It's kind of the same things that founders have always kind of wanted or needed from VCs, and it's their time, it's their compassion, it's the network that they can offer them, and also being okay when you tell the founder to do something and the founder does something else, right? That's kind of what founders are still kind of looking for. And yeah, this hasn't changed much other than, some funds offering perks to portfolio startups and stuff like that. I don't know if you're seeing anything different. I'd actually love to get your views on that myself.
I think that the key is for the fund manager to be useful to the founder, not bossy approaches, not anything else. Communicate in an efficient and honest manner. This is the key. Very simple.
Exactly. Yeah. So I haven't seen a lot of kind of changes from that regard either. It's the same things they wanted 10 years ago. Founders still want today.
Yes, exactly. Have you noticed new models of founder support or community-driven investing emerging?
Yeah. So we're seeing a lot of that. And, kind of thinking back as well to our mission of democratizing access to venture capital and also making funds smaller, thereby allowing smaller limited partners to have access to the asset class. We are starting to see a lot of kind of community driven investing, which is super fascinating to me. So I'll give you some examples. We're working with a couple of funds. So it's not just one. There was a couple of these funds started by Native American fund managers that were raising capital from Native American LPs and reinvesting it into Native American startup founders, right? We're also seeing different religious groups doing a very similar thing where they're redirecting kind of capital and creating value within their communities. So it's super, and the other kind of thing too I do want to bring up is a lot of diaspora funds. And I guess, TECS Capital, you guys are kind of in that space somewhat, in that, you may be a Greek VC investing in Greek startup founders in the US or in Europe or in Africa, even, right? So you're kind of positioning yourself as someone who can really kind of, first of all, I'll kind of go through the advantages of this type of fund because I think it's super interesting. But you kind of go to you're Greek and you move to the US, for example. You do kind of have the tendency to kind of gravitate towards other Greek people that are living there, and so these types of VCs, if they have a fund and they're investing in those types of founders, they have that unique access. Again, kind of going back to an earlier question, to they're the first VCs that are going to see these founders when they land to the US and start their company, right? So, diaspora, immigrant kind of type of funds are super popular right now, and I'm seeing more and more of them. And I think it's great that there's something like that. We work with Ihar Mahanyok's Geek Ventures. They're a partner of ours, and they're doing that in the US, and they're probably one of the most successful kind of US funds to be doing that model right now.
Yes, very interesting thesis. Yeah, exactly. What differentiates the next generation of fund managers from traditional GPs?
Yeah, so there's a few things, right? When we look at the background, the kind of, you know, background that these fund managers have is very different to what kind of the traditional course of a career course would be for a traditional VC. If you kind of went back 5-10 years, so that's something. The funds they're raising are perhaps smaller. There's more of these types of funds around, right? So whereas you may have been the first kind of venture capital fund to be set up in Thessaloniki, maybe, in 5 to 10 years, there may be, another 5 or 10 nano ones to pop up. We're seeing too that the fund managers are younger, right? So every cohort we ran, we're kind of always looking at what are the characteristics of the successful fund managers, and the age average is dropping with time. We're seeing more diversity, which is something I'm personally ecstatic about. More women leading their own venture capital funds. I can think of a few places I've been to. There isn't a single VC fund with a general partner that's a woman, and that to me is and I'm talking about kind of pretty well established ecosystems, right? So that's mind boggling to me, and they're a lot leaner, right? So they're being really set up in this Silicon Valley style of setting up VC funds where they do things really fast. They don't have a lot of kind of reporting overhead to anyone. They don't have restrictions in terms of what they can invest in or not, and that allows them to kind of move very quickly from a fund one to a fund two to a fund three, right? And to start to establish themselves as a major VC fund in the region. Um, and yeah, the other thing is that all of these new funds, they're heavily powered by AI in all of their operations. So they're kind of like these AI VCs, basically.
Okay, this is what we are describing is probably industry disruption, actually.
Absolutely. Yeah, the VC landscape is going to look so much different, I think, in the next 5 or 10 years. And to your point, these people and these fund managers are starting really, really small. They're backed by, LPs who are friends and family or people from their community. And that's how they're getting started. But they're going to, some of these fund managers have had, if I look back at kind of some earlier cohorts of VC Lab, they're already kind of they oversubscribed fund one in less than a year, deployed that fund, and now are already into fund two, right? And they're gaining a lot of traction really quickly. So yeah, I think we're going to start to see very different kind of names dominating the VC space, but also and that's why I think VC is a very interesting kind of space too, because the more the earlier the VC fund is in its kind of life, the earlier stages it's going to be investing in. And the more you grow, the larger your funds get, and the harder it becomes to keep playing in those smaller stages with the smaller tickets. You need to kind of start investing in later and later rounds. And so there's always this kind of shifting, kind of like waves, I guess. I don't, this shifting of and different waves of VC funds that are dominating each space with time, right? So Lightspeed Ventures, who was recently in the public eye for kind of exiting venture capital because it's starting to do very kind of later stage investments. Their fund one was maybe $6 million, and it was super duper pre-seed. They were the first ticket in Snapchat, right? And today they're one of the top 5 VC funds. People are debating whether this is still VC. And so they're kind of, all these VC funds are kind of progressing to later and later stages, and thereby leaving space to newer entrants in their previous spaces, which I think is super cool.
Yeah, exactly. Myrto, what initially attracted you to venture capital and specifically to VC Labs mission?
Yeah, so for when I started my career, I was a classic kind of millennial who wanted to create impact right out of university, right? And so actually my career was kind of very much, or my career progression defined by this personal mission of mine. And I started out working in startup accelerators. And what I found out really quickly was that there wasn't any amount of mentoring or networking or workshopping that you could do that the founders would be okay with without coming to you and being like, okay, Myrto, you're great and I love your workshops. But what I really need is capital. And so, we're trying to raise around. And so if I realized that if you want to make an impact on these founders' lives that are creating the future, then it's money that's going to move the needle, right? And so I then started working as a VC and kind of playing that role of okay, allocating the capital. And VC Lab just perfectly combines my background being a VC as well as running accelerators. And now I'm kind of seeing, I'm instead of working with one VC fund, we run 4 cohorts a year. We see 300 managers start out in each of these cohorts, and about 50 firms graduate from our programs every quarter or so. And in total, these managers have commitments worth $70 million, ready to be deployed after every quarter, right? And so that's $280 million per year that can be deployed. And that's just from kind of these new managers that are being set up. And they've all pledged the Mensarius Oath for ethical investing. And, we have good reason to believe after working with them that they're going to be investing in really kind of impactful companies. So, yeah, what attracted me to VC Lab was that, okay, I could deploy as a VC maybe $1 million to $2 million a quarter versus helping all of these new funds get set up and deploy, 270 million, 90 million or more.
You have worked with an impressive amount of new fund managers through VC Lab. What's the most unexpected lesson you have learned from your work with them?
I think that my unexpected lesson is probably the fund manager's unexpected lesson. And it's that if you are starting a new VC fund, you're going to spend a lot more time than you thought with the limited partners versus the startups. Everyone who wants to start a VC fund, what's in their mind is kind of spending time with the founders. But the harsh reality, and Adonis, you probably know this better than anyone else, is that you actually spend a lot of time with these limited partners selling the fun and the mission, right? And so I think this is just kind of something that I didn't realize even kind of working in a VC fund, because it's usually just kind of the general partners and the managing partners that are exposed to that. But yeah, I would say that's kind of one of the biggest learnings.
Myrto, how do you balance the analytical side of venture with the human stories behind every fund and the management team?
Yeah, I like this question. And being at VC Lab, we just have so much data on the new fund managers that are, launching funds around the world, as well as kind of the startups that they're investing in. So it's very easy to kind of slip into the space where it's all just numbers and analytics. But, especially at this kind of pre-seed level and seed, which is the majority of, it's kind of the space where we're working at predominantly. It is a lot about the stories. It's not very much about kind of the data and the numbers and the relationships, right, between the LP and the VC, or the VC and the startup founder. And so, I do like that kind of very early stage investing, because it's still very human centric, no matter how
Very
much
personal.
AI. Yeah,
Yes,
very
exactly.
personal. Exactly.
And if an aspiring fund manager is watching, what single piece of advice would you share?
Yeah, so going back to, my biggest learning, it would be if you want to start a fund, keep doing what you're doing with the startup founders, keep mentoring or developing your own unique kind of deal flow pipeline, keep angel investing if you have the ability to, but don't forget to start building up that limited partner network and deepening your relationship with those LPs and wealthy individuals in your network, because they're the ones that are going to make or break the fund. And they're the ones that it's the hardest to kind of convert and, bring on board to make your VC fund happen. So that's the first thing. And then the second thing would be apply to VC Lab because it's completely free. And we tell you everything you need to know about, how to set up a fund, where the big kind of traps are and where you could stumble and fall really hard to the point where you can't make the fund happen anymore, and just how to save a lot of time and money. So there you go. And I hope to work with you.
Last but not least, personally, what keeps you most inspired about the future of venture capital?
Yeah, personally, I've always kind of been a fan of the underdog winning at the end kind of situation. And this is, what I'm hoping to see. I'm hoping to see kind of a new world order almost with emerging values driven financial institutions that are arising and giving opportunity where opportunity is deserved, right? So I want to see more local ecosystems with their own local VC firms, starting out and then getting larger and kind of starting to plug those later stage funding gaps that will inevitably exist, kind of the more developed your ecosystem is, to start filling those spaces. And just making sure that behind all of this sit very kind of values driven and ethical managers.
Myrto, thanks a lot. It was really insightful. It was really amazing discussing with you. Thank you for being here today, and see you soon.
Adonis, thank you so, so much. It was a pleasure to be here. Good luck with TECS. You guys are doing incredible. And yeah, thank you so much for having me on the podcast.
Thanks a lot. Bye.